Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, a little bit more subdued after my last, just prior to Christmas. I think I was a little bit overexcited talking to Tony in the lead up to Christmas Day, end of the year. We kind of gave a recap, but that was a month ago. Tony, sorry I've been a little bit absent, but I just needed to take a little bit of time out. I hope you had a good Christmas.
No worries, Kerry. Very quiet for us. I just went and bought some Kayla's prawns from Woolworths, got a couple of other things, and we drank some bubbles and went and saw the Banshees of Inisherin, that movie. So that was my Christmas. Besides that, Juliana is absolutely working my backside off in the gym to the point of exhaustion. It's a new me. I think I'm actually keeping a journal this year. And out of the 18 days out of 25, I've actually been to the gym, but I managed to get myself a wrist injury through working out, nothing else. And I'm just keeping a journal of my diet, how many times I get intimate, which I'm not going to reveal that figure. But I just think it's a good way to just keep a balance in life because physical well-being helps with the mental side of it. And that's going to help me with small caps. And every workout session, or when I start to open up my screens, I play "Live It Up" by Mental as Anything, and that's it's just a happy song and gives me that momentum. And I think getting into fitness, getting into healthier stuff is going to help me with my stocks and how I deal with clients. So already a much better start to the year. I think our portfolio's up 7%. We've had a few little green shoots, which is fantastic. And I'll just stick to the same script.
Stick to the same script with some new shoots. And by the way, I totally agree with you, Tony. If you keep yourself healthy in the mind and in the body, it helps with absolutely everything. If you've got if you're not feeling healthy, if you're not feeling sharp, how can you possibly keep yourself educated and alert to what the opportunities or thereof are? Now, you say the market for your stock's up 7%. Is that resources? Is that biotech? Because biotech was slammed, as we know, last year. What are these green shoots you speak about?
Copper. So Copper Search has done well for us. It's been on low volume. Maronan came out with some visual results yesterday, and I admit that I'm really nervous before I open up some of these announcements. Normally, I'll take some time, have a cup of coffee, but that was actually some good news. Some of the biotechs head off the canvas. Last year, biotech stocks cut in half and then some through no real fault of their own. And I guess these companies say they're going to go into the clinic, they have delays, investor interest was at rock bottom. And they just got smashed, and selling always begets further selling. And people make poor decisions when they're sad or lethargic, and they've all trickled lower. But I think we've hit 2023 with a little bit more enthusiasm, which tends to happen in January. And I just think the markets, the major indices, are tiptoeing through the tulips. And I think it's only a matter of time before the US gets a bit of a thumping, just to wake us all up.
When you say US is going to get a little bit of thumping, I'm talking to you on Australia Day. It's the celebration of Australia Day. But when you say the US is going to get a thumping, what do you mean by that? Is that because of the inflation numbers, or what do you mean by that?
Well, the major indices just can't keep going up. And, sometimes you cop that reality check, just like with our market, which was having more rallies than, the woke brigade. And then suddenly we come up with an ugly set of numbers in inflation, and our market turns. So we are going to get days where the indices are red, and we haven't had enough red days. And I liken a good balanced watch list to a South Sydney Rabbitohs jersey with a mixture of green and red. I just think at the moment, it's like with gold. Sometimes gold was tiptoeing through the tulips going sideways, then it gets a smack down. But now it's 1931, which is fantastic. So I just think we all need to be mindful that, we are going to have 5, 6, 1,000-point down nights on the US market. And it's going to make holding small cap stocks challenging, because what I've experienced through dealing with a company such as Maronan, you're going to have to take the hits along the way. But these things are easy to own in hindsight, but you need to feel the pain and the euphoria of holding these stocks. And that's what it's all about. And if you can't handle those mood swings of the market, I think you better stick to term deposits, which are now looking mighty attractive.
Yeah, I guess it goes back to that old adage, patience, grasshopper. I think some of us are wanting the dopamine hit and the fast results, but some of these things are going to take a little while. I want to know this, Tony. What is it that, because you've mentioned Maronan now a couple of times, why them? Why do you like them? And by the way, ladies and gentlemen, this is not financial advice. Tony and I always have these chats about various things that he's looking at, but please do your own research and don't put a dime of your hard-earned cash into this market until you have either spoken to your financial advisor, done a lot of research. But Tony, I just want to go back. Maronan. Why Maronan?
Well, let me disclose that we're as full as a selective state school. My kids got some Maronan shares for Christmas. I gave them a cash option. Kids, take the shares or the cash. They took the shares. Well, it's got a resource in Queensland. The copper gold results are better than what they thought. They've got 100 million ounces of silver, and they're drilling to the center of the earth. I think their last hole was about 1.5 kilometers, and it's got some lead. Yeah, it's deep, but a lot of these mines do go quite deep. And I just think that in that Cloncurry region, this could be the source of corporate activity. Touch wood, I hope that doesn't happen. But this is one of the best undeveloped resources in Australia. Plus, the other thing is, once silver stocks have a run, God knows when that's going to be, Kerry, but the market cap brigade will start calculating that it's got a huge silver resource and it's undervalued. So I guess you've got to look at what resources can become much bigger ones, what is a potential resource that someone else might want, and what can give us some decent upside. So, I mean, that's what I look at in a mining stock. Copper Search is Hero or Zero, a Powerball stock. So, that's a classic case of kill and drill. And then we can go into the biotechs, which had probably one of their worst years on record. But the trials are coming up, and I'm looking at some small companies that I can identify with that you can start investing, and you share that bloody journey. And I look at a biotech barometer such as TLX, which was hanging around 50 cents 4 years ago, peaked at over $8, but had a yearly low of $3.55. So you have to share in that pain to get somewhere. So that's what I'm looking at. I'm looking at a small company called Radio Farm, which I think has all the characteristics of a much bigger company in the future. But they are going to they're going to get beaten up from time to time. I mean, not every molecule is going to be a blockbuster. Not every imaging trial is going to come up to that standard. You're not going to hit home runs on every pitch. So I just see small caps as a journey. And, we can all look back at charts and how wonderful they look. But, if you don't buy these things, it's not going to pay your utility bills or your weekly groceries. So you're either in or you're out. You can't get a little bit pregnant, to steal a line from Wall Street.
But what is Tony, as we come into 2023, I'm talking to you in January, as I said, it's Australia Day. What is Tony liking? Is it management? Is it the commodity? Is it the sector? Is it a bit of both? Should people be diversified within the small caps area. And by diversification, I mean, look, you're not diversified if 100% of your wealth is in the stock market, in my opinion, but the diversification of commodities versus biotech versus industrials. I just kind of want to get an understanding of what's floating Tony's boat as we come into 2023.
Apart from the gym women and whatever. Look, it all goes down to that famous, well-esteemed lawyer, Dennis Denudo. Kerry, it's all about the vibe. And I guess from my experience in looking at small cap companies, having successes, failures, regrets, and all of that, I look at as an all-encompassing company. It's a community, you've got management, you've got upside case, you've got cash in the bank, top 20 shareholders. It's like throwing all these ingredients into a NutriBullet and hoping that something comes out delicious. But it's a lot of hard work, a lot of research, and unfortunately, many that enter the market get swayed by tips.
Yeah.
From the mate at the pub. I don't know if men still go to the pub and talk, or you see couples out on the date and all they're doing is on their phones. But with the proliferation of social media, now we're just drowning in information, and there's too many opportunities. It's too much promotion. It's turned into a marketing game now. So I just think you need to step back and get back to basics. And on the weekend, we actually went to the beautiful Cottesloe Beach in Perth, one of the joys of living here, and we all left our phones at home. And what you actually realise, Kerry, that this can take you back to the 70s, that life minus all this other bullshit is pretty simple. And I think you can get through the markets by company announcements and the pages of a Fin Review. So I think it boils down to everything. But the shame, or probably one of the most disappointing things, is that when you get into the small cap market, you find you lose a lot of money over the first few years. You stick with tips. You're the last person to buy on a hot tip. You might get too involved in web forums. You might become fascinated or obsessed with the share price, with all these conspiracy theories. So human beings generally are wired to buy high and sell low and think the worst of everything. And what I find is that humans make bad decisions when they're sad or down. And what I try and do is mentally mitigate that as best I can. I find that getting to conferences, the best way to turn the bullshit detector on is to eyeball someone. Yeah. They're standing there at a booth to talk to you.
Yep.
And I've always come out of a conference with one or two gems or a tip to do something a little bit different, a tip to look closer into a company. And once you start to build relationships with other investors, I just think it manifests. But I just think social media, to some extent, Kerry, has killed the romance of speculation, like discount airlines have killed the romance of flying, unless you fly Qantas, where you get an experience. But
some people might disagree with that, but anyway.
Yeah, but I just think I like simplicity. I like to play old school. And I'll go back to, I mean, this is a bad example. It's been used to death. You know, Charlie Munger and Warren Buffett, they've survived throughout all these crazes and fads, and people say, you're a dinosaur, you didn't jump on this. Locantro, why aren't you buying the totally dazed and confused 8 Club? Because I don't understand that shit. I don't care if it goes up or down. I've got enough pressure at the blackjack table if someone back bets me. And it's either up or down, red or black, or the casino will change the bloody odds. So I'd rather speculate in a small company, which I think has the credentials to become a much bigger one. And Warren Buffett, before he became one of the most famous investors, he used to invest in stocks he'd call cigar butts, and they were specs. He invested in speculated until he got too big. And I just kept going back to some of these classic books, classic quotes. I often love watching Rick Rule.
Yeah,
I think he's
great.
one of the most switched on guys in the market. And I've met him a couple of times. I actually interviewed him 12 years ago, and that guy just oozes common sense. And he's absolutely right that he is a steady player that will survive the booms and the busts because he's still around. And a lot of these mining stocks have been beaten up. So I know that was a long answer to a pretty simple question, but I think if you can allocate a small portion of your total portfolio into finding bigger companies, I just think it's totally rewarding, and you only have to really get one or two right, and the job's done.
All right. So going back to that, there's a lot of different companies out there. There's a lot of different sectors. There's a lot of different, even within resources, there's lots of different commodities, even in resources. How do you pick the wheat from the chaff? How does Tony look at it? Is it because you talk to management? Do you look at the cash balance? Do you look at the asset? How do you, because there are people out there that scratch their head. And as you said a moment ago, they go on social media and they take the tip from something on social media without having any clue of what they're doing. Apart from becoming a client of yours, if they don't want to do that, give me some tips about what they should be looking for in 2023.
Look at the quarterly report. There's about to be an avalanche of them.
Yep.
Look at some quality. If you're into the resources, look at the quality junior resource companies. I always find a good benchmark of a quarterly report used to be Minotaur, but then that ended up morphing into Demetallica, which ended up now AIC.
Yeah.
Even though Red Metal has done Jack really for a number of years, I think that's an ideal quarterly report to look at when it comes out. There are some quality juniors. Encounter Resources, Will Robinson, who's been there forever. That's another quality, even though we aren't in that stock, that's another quality quarterly report to look at. And if you start to look at the biotechs, well, it's a bit tougher there. But I'd suggest looking at what Radiopharm are producing in their quarterly reports as well. You have your barometers in the biotechs, which are pretty much TLX and Imugene, which is one of the most popular biotech stocks out there. So look at how these companies set out these reports. Look at who their partners are. I think the biggest indication of a company, if you look at a junior resource company that's tied up with Oz Minerals or Newcrest or BHP, that is a good sign of confidence in that company. Or in the case of a bio where you have some major pharma companies involved. And what I've said, one of my lines I repeat ad infinitum to clients is good people attract good projects. Yeah. So we can have well-credentialed people. You can go back to the early nickel days when Western Mining was selling all their nickel. Chris Bonwick from Independence heard about a nickel mine being sold at a barbecue, paid $15 million for it. It's probably paid $500 million in tax now. Same, it's a long used example, but Bill Beeman bought one gold mine, then he turned Northern Star into a major company. But you have to be a well-regarded person in the industry. If you're a little less serious, you're not going to get the real projects. But what I've noticed is there's been lots of rare earth discoveries, which means now they're quite common.
Yes.
And we're still seeing that the final throes maybe of the bandwagon brigade where companies cannot get any interest. So they'll find a rare earth project. They might find a lithium project without a hope in hell of being developed, or they'll jump on whatever's hot. And my experience of that, Kerry, goes back to the Asian crisis, which created the shells for the tech bubble, where even the most experienced mining professionals were under pressure to go .com. And, the bandwagons have probably been around since the 1600s. So if you get too caught up in the bandwagon stocks, you can make a lot of money. There's no two ways about it. But are you scarred for life? Are you a gambler? are you the type that's checking share prices every few seconds on their phone or punting on something that's worthless? So I look at it that sometimes you have to watch others make money and stick to what you know. Don't chase the dopamine hits and become a solid accumulator of small companies. And I think that's the only path to success, not jumping in and out of rumor-driven stocks, because the only winner really is going to be the market maker or your advisor. But I've seen this since I started advising, 98 now. But one of the biggest lessons I learned is through the techbubble.com, I only had a handful of clients that could change their behavior, probably out of 500 people. So it's all about psychology. And even though the marshmallow test for 4-year-olds is probably overrated, I think a lot of these traits you're born with or you pick up throughout your youth, and that will determine if you're successful or not.
Do you advise clients to have a certain percentage? For example, you mentioned Rick Rule before, and others have said, have a percentage exposure to gold, whether that be physical or in gold stocks themselves. Do you have a view on a percentage in small caps, or go all in on small caps? What's your advice?
80-20. So have 80% of your assets in solid stuff, physical assets, access to cash spread across ADIs, obviously. But I think when you look at small caps, you can apply the same rules of eating. Eat 80% nutrient dense, eat 20% shit when you want, because you can't stick to that. And whilst people call speculative stocks shit, that's where you can have that big win, where you can get onto some of these smaller companies that become bigger ones. So it depends. I had a Zoom with a potential client yesterday, or phone call actually, and he's come into a lot of money. And I said, well, let's just start with 5%. 5% towards speculation. He's a mad viewer of this show, but I think you need to build confidence. And sometimes when the markets get belted, you wish you're in cash, but again, you're missing out. So I treat everyone on an individual basis. I'm not going to advise anyone to go too hard. I think self-managed super funds are quite dangerous in that the money is treated differently to as if you can get it tomorrow. And I think there needs to be a high degree of caution and obviously a smaller percentage of that pie into these highly speculative stocks, because like last year, we found a lot of ours were cut in half.
Yeah.
And then some, through no major fault on the research side. It's just that the market sadly went against us when the hot money was chasing other stuff. And whilst you have these bandwagons and others promoting stuff, the real steady players in small caps probably don't have a good year, but at least we're around, we're going to survive until the next cycle comes.
And they are cycles, but I'm sitting here chatting to you, and coming up is the Reserve Bank meeting. I think it's the 7th of February, in a couple of weeks' time. We've come out with some inflation numbers now. When you say cash, that can be eaten up pretty quickly if inflation, your purchasing power disappears. Are they better off not being in so much cash when we see inflation coming out at 7.8, but you know that the real inflation rate is probably a little bit more inflated than that? What's your view on inflation in 2023? Sticky?
Well, it's hard. It's going to be hard to get rid of, isn't it? Really, what's going to change? I mean, with interest rates, it's a bit like whack-a-mole. Once inflation rears its head, you belt the shit out of it, or it's a bit like losing quick wickets in a T20 game. It's aimed to slow the rate of growth down. And Australians have been spending like, I don't know what the hell we're on. and retail sales were strong.
Yeah.
Then suddenly we've got price pressure, we've got supply chain pressure, inflation up, and it looks as though that the rates have to go up probably another 0.4, 0.5% in 2 increments. And that, sadly, that spells 7% mortgages, i.e. Armageddon for those that pay too much on leverage. And that's, the worst type of stress really is going to be financial stress. And that leads to relationship stress and other stress. And it's an ugly situation. The RBA got it completely wrong. And now they're being forced to play catch up. But all they can really do, they can't do a door knock and see how families are struggling. All they can do is base it on that CPI figure, which was an absolute shocker. But inflation's certainly going to be hard to bring down when you look at the costs of electricity, you look at the cost of energy, you look at building costs, you look at the price of cherries, blueberries, raspberries, and it's not looking good, Kerry. And sadly, we were lulled into this false sense of the security that you had to jump on the ladder. You had to pay up to 17 times your income. What a complete load of shit. But now we are going to pay for this debt binge. And unfortunately, a lot of families are going to do it really tough. But I see stepping outside of a bank account? Well, that involves risk, doesn't it?
Yeah.
And you can still buy gold at 2,731 Aussie dollars, but then it's a currency play with the US dollar as well. And you've got the choice. Do you go for physical gold, buy a safe, worry, or do you simply go onto the market now and buy an ETF that tracks the gold price? So investors, speculators really are spoilt for choice. But apart from a well-paying term deposit, which you could probably get around 5%, where is it safe to put your money? Do you go into real estate where the costs are massive, you pay a shit ton of stamp, and then you've got downside as well once the investors start to sell. So do you go into collectibles? Do you go into baseball cards, classic cards? All those markets can collapse. The art market can collapse as well. So I don't think there's many places you can hide, but there will be bubbles and bandwagons that will build. And I guess you've got to look at what the resource market's doing in Canada for your lead on that.
And what is the resource market doing in Canada?
Well, their speculative stocks are very similar to ours. They can be of that cowboy nature as well. So the market is still hot for lithium, despite mixed reports from the major brokers. Rare earths, I've got a classic example. I went on a field trip to Nolan's Bore near Alice Springs, which is Arafura's project. Yeah. That was 20 years ago. 20 years ago, I walked over that project. So that's how long it's taken Arafura now, and they're ordering their lead items to get into production. So that's how long real companies take. But they were lucky because they had the uranium bubble. I think they went from 20 cents to $3 equivalent. Then they came all the way back. So I don't think you should start trying to pick the next bubble because you'll end up too diversified. I say to clients, let's just play the same script. Here are 6 companies which we spoke about that have good potential to transform. I have my Tenacious 20, which I introduced to my clients on that Zoom call. So I just think that my playbook shouldn't really change, but if there is a bit of a build-up, we'll maybe look at that sector. But often it's just hard to predict a bubble, Kerry, when you're not in one. And when you're in one, you don't know. It's like either being dead or stupid. You just don't know.
Well, it goes back to what you said before, Charlie Munger and Warren Buffett, who've become very astute. But what they've said in the past is they buy good companies undervalued. And if the market hates them for a while, they don't care about that because if the fundamentals are there, they stick and stay. Now, that's not for everybody. But again, it comes back to don't listen to the social media, do your own research. And Warren Buffett spends most mornings reading all of the information that's coming out, and he does not go on social media. He actually reads what you just spoken about before, quarterly reports. He looks at the management. He looks at what the company is doing. So I think, Tony, from what I'm hearing, it's people just need to go a little bit deeper and educate themselves a little bit more rather than just taking the first comment on social media and going all in.
Well, I guess I'm on social media, so that all might all sound a little bit hypocritical, but actually over the break, I had a family that wanted me to teach them about the stock market investment. So we had a couple of Zooms, and the family were having their infighting. But what an opportunity for the young amongst us, even someone in their 20s, to start dollar cost averaging. Can you imagine buying into a ASX 200 ETF? Obviously, if you come to a broker like me, you're going to get wiped out on costs. But some of these facilities, you could dollar cost average an ASX 200 ETF for $110 a year. That's unheard of. And the other thing that kids can do is be uncool at school, so to speak, or once you get out of there, you could dollar cost average a gold ETF.
Yeah.
So that they are the groundings I feel that kids really aren't taught. I think those Barefoot Investor books and the kids, they're brilliant. They provide the grounding. But can you imagine a disciplined 18-year-old that starts to get into these ETFs? ETFs are effective, management fees are low, and that's a start. Then you can diversify from that. But I think
if you're young, you've got time on your side. I'm not that young.
Oh, well, you think, oh, geez, I'm 20 now. Oh, I have to wait till I'm 30. Then suddenly you're 40 and then you're still young. Oh, I'm 51. And finally, I've learnt what physical pain is from essentially, Kerry, not working a day in my life, because pretty much I joined the police out of school and then I've become an advisor. So I would know what physical labour is, but I admire those that can do it. So I just think that, wow, can you imagine kids in their 20s, listening to this and saying, and suddenly they're on the right path and they don't have to spend thousands of dollars on bullshit courses, buy all these trading books wrapped in plastic. Just get back to bloody basics. I know you'd rather listen to a girl in a bikini with some nice tats over a boring old me, but it's very simple. Buy low, sell high, and just have, sometimes the best trading tool is your backside, and that's by doing nothing.
Yeah. And we're running out of time, Tony. So I just want to ask you to wrap it up and give us 3 things that you think people should be doing as we head into 2023, bit uncertain times.
Just stick to what you know. Don't worry about near-term price movements. Speculators are still skittish out there. The rallies in some of these small stocks will not follow through. Just continue to read the news, bank the good news, stay prepared, stay patient, but don't be surprised one day when you see the Dow Jones down around 1,000 points, and don't let it scare you.
I think that is the best advice. The markets will have cycles. They will be up, they will be down. Don't let things scare you. Stay the course, get investing, get educated. Tony Locantro from Alto Capital, thanks so much for joining me on Small Caps today.
Always a pleasure, and we'll see you soon.